Hi, everyone. How are we? Glad that we're together. Welcome to Market Kickoff. Today is Sunday, December the 7th, and we've got a big week ahead of us. And so I want to start with the simple things, like telling you a little bit about what kind of price action we might see today and in the coming days and why. And so here's what we want to look at. We're coming into the second week of December, and what tends to happen is something called distributions. Now, if any of us have 401ks or we have our own stock portfolios that pay dividends, anything like that, we know that we have stocks that can give us quarterly dividends, monthly dividends, half-year dividends, and yearly dividends. Well, all of those happen to match the yearly dividend event. And so distributions will occur this week from every dividend-bearing stock in the market. Now, side note, if you're a little bit newer and you don't have, I'm so sorry, I've got a hair that's in my eyeball and is driving me bonkers. So I apologize for my hands being all over my face. So let's go ahead. What happens when we get a dividend-bearing stock is that when the dividend gets paid, the stock price drops by the amount of the dividend. And so that means if you have a $1 dividend and the stock price is $100, on the day the dividend is sent to your account, the stock price will drop by $1. So it will become $99. So we have that to deal with, and there are a lot of dividend-bearing stocks that are coming into month end, and we're going to see that next week. Now, something else that's happening is that we've got the FOMC. And so that FOMC is going to tell us whether interest rates are going to be a quarter point down. I suspect they are. There's the tool, FedWatch tool, says it's like 84%, some kind of huge number. And so we expect it to come in, but what we've been doing is rising into this number. And so my suspicion is that we may have a buy the rumor, sell the news. So let's jump right into it and start taking a look at the E-mini S&P. Now, I get a lot of notes. Folks go, hey, how do you get the call wall? So if you have an ordinary stock trading platform that gives you option chains, you can go to the SPX and the NDX and the Russell and whomever into those chains, and you just look down the list and you can see where most people have sold that event. And so they'll either sell some puts to collect some cash, or they'll sell some calls to collect some cash. And so that's really what we're staring down at this time. They collect those dollar amounts, and they hope that during the week/month, the price action stays in between those two levels. Now, what we also have are the 0 DTE call walls and the put walls. So I want to read those numbers to you. The first one, yeah, provided I can see them. The big call wall is 7,000. It has remained 7,000 since last week. The 0 DTE call wall for tomorrow is 6,900. At this time, we sit just shy of that in a generally bullish formation. You can see price action is trending upward in general. We have these nasty dips, but they're still trending upward. And so for the intraday trader, we're going to get caught between these, oh my gosh, is it selling off? Or, oh my gosh, is it going to the moon? Here's what we've noticed every single day last week. every deep dip was bought. I anticipate it's the same sort of thing. We just might have a deeper dip. So we've got a call wall at 7,000, the 0 DTE call wall. That means it expires tomorrow at market close. That one is 6,900. The 0 DTE put wall is 6,830, and the deep put wall is 6,700. Now, last week, if you were remembering, it was 6,400. And so you can see the put wall is rising and the call wall is staying steady. That's telling us that, hey, we're having a little bit more confidence that we are going to have a little bit of a rally. So let's jump right into the 30-minute, take a look at what's going on with price action, and consider what we might be doing. Ooh, let me take a look at let me see what the pre-market is telling us about how we're going to open, whether we're going to gap or not. So hang on. Okay, so we've got a minor gap up set for the open in just a couple of minutes. Just the NAS is 0.31%, the S&P 0.19%, so it's pretty tight, but everything looks to gap up at this particular time. So we're looking for a gap up into the space. So here's what I've done. I've anchored the VWAP to the third last. I anchored it on Wednesday at the low, and that VWAP takes me right up to this level. I also anchored it here at this second to last low, but let's remove that. We already see sideways action right here. And then I went to the highest level and I anchored a VWAP there. So what that tells you is if you entered up here, the anchored VWAP says if you went long, you are underwater. The anchored VWAP from here says that if you went long, you are nice and green. And so that's really all the anchored VWAP tells you. Hey, where am I sitting relative to price? We are sitting with the point of control here. Now, you might go, what do you mean, point of control? Where's the rest of your volume profile? I actually have it hidden because I just don't like the noise, right? It says VPVR. I've got my style set at zeros, so you don't see anything. But I do have my point of control so that I can see that because I want my chart as clean as possible. All right, next thing we do, every single time, folks, this is going to help you. Take a look at where the buyers came in and held and where the sellers came in and held. Now, you might go, holy cow, Emery, they fell right off a cliff here. Yes, they did, but they recovered and went right back into the range and broke out. So my thought is that we have a range currently that sits between 68.86 and 68.74. So my thought is, based on this formation, which is a little messy, folks. Why? Because we have lower highs and we have higher lows. Okay? That's what we're staring down. So whatever this does, it's very likely to reverse. So what do I want to do? I want to put, let's see what risk I can manage. I want to put a buy at this 68.67. Oh, it won't do it until the market fills. Sorry. We got to do that when the market opens. But that's what I want to do. I want to place a position down here at the wicks where they bought the last time. If it looks like we can get more aggressive, we might be able to get 68.72. But that's about it for me. I don't want to push it any further. Let's take a look at the NQ. Looks pretty similar, right? If we take a look at the 4-hour, here are the call walls. These don't change, right? Look at how far down the put walls are on the NQ. That's very interesting to me. Very, very interesting. it tells me that, well, yeah, it is squeezing a little bit, but that squeezing as together, not squeezing as in running the way up, which is what we normally would call a squeeze. A squeeze is when traders have gotten too short and they have to run out of the room, and so they have to buy it up. And so that's what we normally call a squeeze. But price action is squeezing together if we look from the different anchors of the VWAP. So that is correct. So here are the numbers to put down. You're going to see them during the week, I promise. 1, for the call wall in the NQ, 25,800. The 0 DTE call wall is 25,700. So there's only 100 points between the big call wall and the 0 DTE call wall. Our volume point of control, pretty important, is right about 25,650. I'm blind, folks. I just can't help it. I can't see a thing. And then the put wall is 25,150. I'm sorry. Panic Pete sends to say hello. He's not panicking, but then the market's closed. So there we have it. Actually, Dee told me I should name him Rowdy Roddy, or we have a lot of names for him. It changes from time to time whenever he's rears his head. So the put wall way down here, 25,150. The deep put wall is 24,600. And that's what we're going to look at. Let's zoom into the NQ. I know a lot of us trade it. Take a look at what's going on. I drew a Fibonacci here. And my goal is always to look for where did the buyers come in and say, you know what, I'll buy that. That's what I'm looking for. And so I could see them coming in really, I think, okay, I can unlock that one. This one looks much better down here, the harder I look at it, right? This one, this range looks like the wider range, because take a look. If we highlight it and we say, all right, let's go backwards in time, you can see them buying from here, trying to hold the ledge, collapsing, and then recovering. So that, my friends, is what I actually believe that this price action is holding through. Now notice, here's the anchored VWAP on the high, the last high, and the anchored VWAP, if we put it on the last low, it's actually going to be the same place, interestingly. And that actually tells us there's an even amount of volume sitting in the range. Let me show you if that makes any sense. See how the two VWAPs are very close to each other? What that tells you is there's an even amount of volume between the high levels and the low levels. That should make sense if you go, okay, where's my point of control? You're going to see the point of control is right in the middle of that zone. And so remember, the markets are telling you a story. And so it's much better, certainly for somebody like me, it's much better to paint a picture and tell a story of what the traders are doing rather than saying, okay, here's where the anchored VWAP is, I'm going long. Here's where the 0 DTE call wall is, where I'm going long. Notice it's right up here at the top. Very nice, but it's very sideways. So what we want to do is watch it expand and then rotate downward, right? So if I'm staring the NQ down, I'm going to say, I would actually take the short right here, but I won't be looking at it as tightly. And so I am going to move, I'm going to put a sell order right up here in front of the call wall. That's where I think this price action could bounce and then reject. At the same token, it could easily come to the 0 DTE call wall and bounce off of that zone. And so I'm going to put two edges up. and I'm just going to wait for price in the time that we're together and we talk about the charts. It's either, in my mind, it's either going to reject above here or build a support here and run through the top of the box. That's why I look at what the traders have been doing with price. Okay? All right. Let's take a look at micro Bitcoin. So, as many of you know, I'm fairly bearish on this guy, but I do believe that liquidity and general price action is going to give us a shot. Oh, okay, that's very funny. Just to the one who wants their wife to read charts like this, 25 years, so be patient, but she'll get it. All right, so look at what's happening here in Bitcoin. Very strange behavior, and it's like this because the option traders in Bitcoin are not nearly as sophisticated as the option traders in the SPX. How do we know this? Because we see the put walls and the call walls sitting in these very bizarre places. So let's remember, a call wall is a space where they don't think price is going to go higher than. A put wall is a place where they don't think price is going to go lower. So the put wall is support, the call wall is resistance. Now, it doesn't mean that it never breaks, because people do what people do. But we notice in Bitcoin, especially if we've been together on these shows, you'll notice that these guys are always in trouble. And here's what's supposed to happen. The call wall is supposed to be above the put wall. That way, if you sell the calls and you sell the puts, you make the money no matter what happens in between. Here, the call wall is below the put wall. So what that means is only one of these guys wins. Either the one that retains the floor, that's the put wall. If it moves above here, the put sellers are going to win. If it moves below here, the call wall is going to have the call sellers win. Right now, there's a $100 space between the put wall and the call wall. And so far, it's the call wall that's close to winning, right? Because it's under the put wall and it's trying to break through that call wall. So this one's a mess, but let's take a look at how it can move. Let's talk about inventory. Remember, Hope tells us this every week. What is the purpose of a market? The purpose of a market is to facilitate trade. And so what does that mean? How do I facilitate trade? If I want to open up a shop, I got to get stuff to sell. And so that means inventory accumulation. And so we either buy stuff so we can sell it at a more expensive price, or we sell stuff so that we can buy it back at a cheaper price. Whichever the case, there are going to be buyers and sellers that argue in a range. And so what happened on Wednesday is they created a range, and Thursday they had the range. Thursday they broke it. Friday they got to the midpoint of the range and then broke it down and just has been moving downward ever since. We've anchored the VWAP here. That means if people bought here, they're still underwater because it's under this VWAP. And if they bought way up here, they're definitely underwater. So all of price is underneath these anchored VWAPs. The only VWAP that gives us upward flow is the VWAP anchored on the low of Friday. Those are the only people that are green right now. So what's staring up? We can see the higher lows. We know the traders are going to try and get from one basin to the other, but then price action's likely to fall. That's just my thought, right? From this space. There's nothing about Bitcoin that feels solid right now. It's got to get to some lower levels. It absolutely has to. Let's go to oil. Okay, so super interesting. A lot of crazy stuff going on with oil. A lot of stuff going on with nat gas. Don't read too much into what you're seeing in the news and how you put that information into the charts, and I will tell you why. My husband came from the intelligence community, and there are a lot of things that he cannot tell me. But the one thing that he's told me for 25 years and beyond is don't believe hardly anything that you hear or see, because everything is spun. And, intrinsically I believe that. So we have some crazy things going on in Venezuela. We've got things going on in Saudi Arabia. We just had this business with Qatar over the weekend. It's a dumpster fire, no matter where you look. That being said, the one thing we can take away is when we see price action, and we see that price action confirm what we hear, we know there's... Dude, that is not nice. When we see this price action doing this upward motion, we get the feeling that, hey, we might run. So here's what happened. Last week, the put wall was down at 54. 54. It's moved up to 58. What is that? 8%. That's a very big move. The call wall, interestingly, is at 60. It's been as high as 65, but it's been coming in. Here's the weird thing. The 0 DTEs are priced at 61.25 for the calls and 57 for the puts. Now, those of you who have sort of been trying to figure out this call wall, put wall stuff, you're like, what gives? What do you notice? The 0 DTE put walls and the 0 DTE call walls are normally inside of the big call walls. So what this is telling us is that in the next day or two, the option traders are prepared for expanded volatility. So we could see a sharp move down and then another sharp move up. But by the end of the month, we're going to be settled into this same space. Okay? So the administration is very keen on keeping oil prices down. So they're going to try and smooth over whatever they can to make that happen. That being said, here's the anchored VWAP from this edge. That's the second low on Thursday. And you can see that everyone who's bought since Thursday are above water. But if they bought at the high on Friday, they are just treading water right there. They're about to break even. So, what do we expect? If you're thinking about price action having a range, we can look at a couple of things. If you want to say, hey, I'm going to be aggressive, Bruno, I appreciate you so much. If you want to be aggressive, you've got this upside pressure, so you can go, hey, if it comes in to 60, I'm going to buy it. But it's also telling you that there are sellers and a lot of supply 21 cents later. So this is a scalping trade. Good money, right? Couple $100. It's not a trade that you buy and hold because the traders have not told you there is upside pressure to be had. The better bet is to watch it collapse down into the point of control and have yourself a buy order sitting around this 59.60, 59.40, somewhere there. I'm going to leave that one there. I'm going to leave it on. Let's go to gold, and then we'll chit chat, questions. Hello. I hate it when that guy shows up. All right, let's take a look at gold. Gold, something also very interesting here. See, this is typical. Big call wall up here at 4,300. Big put wall down here at 4,200. Zero DTE put wall inside of the big put wall. That number is 4,230. The zero DTE call wall, 4,300. 4,300, 4,400 is the call wall, excuse me, the big call wall. So this is what a normal positioning looks like. Big call wall, big put wall, and the zero DTE sitting inside. Today, we've got ourselves, look at how sideways gold has been. Gold has really treated us to some magnificent moves over the short run, but it's now settling into a range, and what we notice is every time gold gets to 2,000, 3,000, and of course 4,000, it begins to frame out a range sitting in this space. Now, the FOMC meeting is ahead. People might go, all right, if rates go down, then that means the dollar goes down, that means gold goes up. Normally, that's the case. I don't think that's going to be the case this time around, but it could. So let's zoom in, see what's happening. All right? Where has all the price been accumulating? Good grief. For the last, let's move it out into here. Since the 27th of November, if we waited for the price at 42.25 to recover, and we went long into the top of resistance, we would have had ourselves a very nice trade. It's doing that. Notice where it bounced today. Let's say, ooh, that momentum looks terrible. All right, let's take a peek. Notice, look at the VWAP. We have traders that are underwater if they bought earlier in the week. Let's see what it looks like for Wednesday. Also pretty bad. So anybody who's long, who went long early in the week, they're all underwater right now. All of them. So what do they want to do? They want to hold the floor. And this floor at 42.28 is a really nice place for price action to try to hold. And where would it go? Up into the zero DTE put wall. Remember, they want to be above the put wall, and this is where the anchored VWAP is, so I would suspect that this is where price action is going to want to go. Okay, so I like the way this one is setting up. Let's take a peek here. Let's take a look at this one. It's coming into resistance here. So how about we wait for it to come back into this floor, 42.31. Yeah, let's see how that holds. I like that one. I like it there. Now, it could run away and go straight into the zero DTE put wall. If you want to chase a trade, better to use the micros because it'll manage your risk a little bit better as opposed to just jumping right in and going, oh, after it, yeah, let's do it, right? It's that, I mean, I would love to say trading is that fun adventure event, But you really have to be controlled with your risk events, or you're going to continue to blow up your combines or never get a payout in your XFA because you rush into the finish line. And what you really ought to be thinking about is, can I manage risk and build up a cushion that allows me to trade effectively under the parameters that we have? Please go to finding the 0 DTE walls again. Okay, so how you find the walls. I can't show it to you here because we don't have these walls on Topstep, the Topstep platform. So I'm not allowed to. But if you go to your regular trading platform, your stock platform, any platform that has an option chain, when you go to that option chain, you want to look at tomorrow's expiration. And when you look at tomorrow's expiration, you're going to see something like 3,000 calls on one option price, and then you're going to see 1,500 on another, you're going to see 1,200 on another, and then you're going to see 8,000 in one of them. That's where the biggest collection of traders are sitting. And that creates a wall because of its size. That's how you find them in the chains. I agree. I think the rate cuts are priced in. I do. Now, what I suspect, because we have the rate cuts coming and they're already priced in, and we have distribution flows that are planned that give us, if we study seasonality, we see distribution flows every second week of December. Every single one of them. Why? Because people like me who have big portfolios of dividend-bearing funds, we want to get our dividends. And so they come to us at a regular time, right? A gray hair like me that collects dividends will use those dividends to pay bills, to whatever, right? And so those are expected, and they come out every quarter, every month, depending on what kind of instrument you have. But all of them are going to get paid out this week. So that's why I think we're going to have ourselves a little bit extra market fluctuation. Could I see the NQ really quick? Of course you can. Ooh, nice. It's coming in. All right. So what would you like to talk about with the NQ? Notice, if we want to get super granular, right? Some of us really are heavy into the scalping game, but we're like, I don't know. So let me show you something very, very interesting. Yes, this is a 5-minute. Scalpers can move to a 1-minute, but the goal is pay attention to where the buyers say, okay, let me run with that, and the sellers say, okay, let me run with that. All right? So, first thing, do you see how the market closed? Let me do this. You see how this is the last 5-minute candlestick of the day on Friday. It's also the biggest, okay? So if we are scalping, we're going to look at that last 5-minute candle that has all that volume, and you're going to draw a box around it. And what you're going to notice is after that 4 o'clock event, it does not move above the top of that last 5-minute candle wick. However, it does do it just a minute ago. So take a look. Look at the measured move from the top of the candle here on this 5-minute to this area. Notice something really interesting. It gets almost to the top and then fades and comes right back into the heavy congestion. So the heaviest congestion is really in the middle, right here. So what could you do? You could say, this is pretty sideways. I see the congestion here. What I think I'm going to do is take a short right here on this edge, right? I'm going to risk, I don't know. Let's do a market sell here. Okay? So I'm going to risk let's risk to the top of the wick, right? 3 something. Right? Goes to the top of the wick. What we can do is we can say, hey, I see all of the congestion here. I expect it to collapse on this edge and come right back into the bottom of the box. And so this is where I'm going to take this trade, right? It's going to sit here. It's either going to, what are my boxes? Okay, that's what I'm trying to talk through right here. Yes, that movement is great for scalping. It's absolutely great for scalping. And what you want to remember is the following. When price action compresses in an area like this, and they stay there for a long period of time, what you do end up seeing is accelerations outside revert into the box. What you have to be careful about is exposing yourself to unnecessary risk. Okay? And so here I am. I hate trading the NQ. It's a pain in the neck, but this is very boxy, and you can see it coming to the top. You expect that it comes down into the bottom. Why do you expect that? Because that's what they've been doing for all the last times they were trading. And then we open up, and our first candle tries to go out, and it falls inside of the box. And our second candle tries to go down, and it falls back into the side of the box. And so our thought is, hey, it's going to sit in the box. So I'll take the in the box trade. Okay. I'm $50 away from passing. That's awesome. I want to get better at finding liquidity swings. Why? Past last Wednesday, trading like a newborn baby. Well, go slow and you'll get it. Could you tell us what are your equal boxes? All right, so for these equal boxes, I'm not quite sure what you mean. So what I am going to stare down is a range formation. And what I will do is generally duplicate that range. Let me look at the 1 minute and see if this chart is gaining energy in a way that makes me think this trade is not going to go well. That's fine. Yeah, this is not, ideally this is not a fantastic setup, but it could easily work. It could easily work. All right, so sorry, I'm reading your notes. I feel like if liquidity swings are the best way to small, I got to tell you something. Here's the thing about a liquidity swing. So it's so funny what goes in circles around with traders. So liquidity is any place. All right, I want to give you a counter event. Ooh, what got placed? Oh, my gold. All right, let's see how gold is doing. I'll come back to the gold trade. NQ looks okay. Let's see, let's bring this all the way down to this edge. If it breaks away, see how nicely that rotates into the space? It's really pretty. I'm going to break this off here at the 250 mark, and let's go see what gold is doing so we can get ourselves in a space that might feel better. That's drifting below the number that I would like for it to, so I am going to move my stop just a little further because of this line in the sand where all this liquidity is. See? Where all this liquidity is? And so here is the difference between what a liquidation break is and liquidity. All right? So what I believe you're talking about is a liquidation break. So you can run in the direction of the move or pick it up at the base and run into the new upside. Is that right? Is this what I'm thinking of? Is what you're trying to say? My thought is this. I don't know why I'm getting hung up here, but I believe that there's something really important to be said here. Your goal as a trader is to learn to understand market flow. It's an opportunity for you to understand how traders position themselves for optimal flow and where they put themselves in that range to collect income. So rather than saying, hey, I just want to look for liquidity events, you're going to get a better understanding of where those liquidation breaks occur if your goal becomes, hey, do I understand what the traders are trying to do? And that brings us back to, wait a second, what are traders trying to do? They're trying to buy low and sell high, or they're trying to sell high and buy low, right? We want to sell high, buy at a lower price. We want to buy low and sell at a higher price. So how do we find the places that is the easiest to occur? Well, we find out first where they're buying and selling. And then we go, oh, okay, they're buying up here and they're selling over there, or they're selling over here. And let's see. No, I'm streaming. Do you guys see me? It looks like I've stopped. Oh, no, there I am. Sorry. Okay, so let me go up. I feel like, okay, somebody wants me to go to Bitcoin. Something's happening there. All right, let's do it. Let's go to the 30-minute chart. See what's happening above the call wall. So my suspicion is there is a short here. See this right here? I would say this is short. Now, if for happenstance I am incorrect, it's going to go to the top of this box as opposed to the bottom of its accumulation. Right? Now, here's the thing. I didn't take 10 micro Bitcoin, right? I just took one. Here's why. I'm looking at this, and we can look at this and go, wait a second. I am making higher highs and higher lows, right? That tells me I've got upward trajectory. However, if I take a look at the bigger picture and take more time, I can see that I'm also making lower highs and I am under all of the VWAPs. So the anchored VWAP is a magnificent tool, right? It just popped up off the top of that area. So I would say if this is going to come back, I would anticipate that it comes back somewhere into this zone here. I do not believe that Bitcoin has a rally event sitting on it that's dramatic. That being said, I am no seer, and I could be very wrong. And so what I would suspect is that if it holds here, it's going to move up to this area where everyone said, you know what, if it comes in there, I'm going to hold on to that buy. See, that's another area of liquidity. And it goes all the way to the top of this box. Notice, not a coincidence, folks. Do you see this top of this wick and the top of these wicks, how they're the same? That's an inventory accumulation space. No doubt about it. Absolutely no doubt about it. And so if it loses this edge, it's going to move up to this edge, and that's going to tell us what our risk is. There we go. We're back. And that's okay. I love this. So Ryan says, hey, listen, I'm long Bitcoin. I'm going against you. I love that. First of all, it takes two to trade, and you could entirely be right. So here's the only thing I know about my Bitcoin trade. Here's the only thing I know. That if I lose in this trade, my max loss is $34. That's what I know about this trade, right? If I go over here to my gold trade, oh, for heaven's sakes, operator error. If I go to my gold trade, I am looking at this and I am saying, hey, listen, the most I'm going to lose in this trade is a couple $100. That's all I know about this trade. That's all I know. If it goes well, I'm going to make the money that I make at the top of the range. So what am I most comfortable with? I am comfortable with my loss. That's it. I have defined my loss because that's the only thing I can control. And this is the thing that we have to realize as traders. We have to get really anchored in to the space that the only thing we can control is loss. It doesn't mean that all of a sudden we go, well, I got to make my loss really small. What you have to do is look at what the market is telling you and choose from that spot what you're going to do. Does that make sense? That's me reading. Sorry about my face right there. I'm like, oh my gosh, I should not get that close to the camera. Good grief. Okay, so let me make sure. Liquidity is always sitting someplace for some trade, somewhere for some trader. It gets tricky, especially getting into spoofing, looking. But see, that's it, right? Just like you said, price action is going to tell you the whole story. Here's the interesting thing about trading. Here's why a lot of people have trouble. They're terrified of losing. Now, I don't love to lose. I don't. Puts me in a generally grumpy mood, right? I would like to say if I have a day where my loss is, let's say I lose 10 grand a day, right? Got a trade, got a lot of trades on, pretty crappy day, and I go in, I'm 10 grand down. Am I happy about that? No. But what I knew before I began the day is if I took these trades and they all went badly against me, that's what I'm going to live with. I have those, right? So I can go back and say, all right, did I misread the market? Did I mistime the market? Or is this something that says, hey, listen, 7 out of 10 times I'm going to do okay. 3 times out of 10, I'm not going to do okay. And today I happen to get, 2.5 days worth of 7 out of 10s or 3 out of 10s. That happens, right? We also run into these cycles where no matter what we do, it feels like we are just stinking up the place. No matter what we're doing, we cannot see the market for anything. I have a great piece of advice for you. All right, I have 2 choices for you to consider. One, you keep trading and either blow up an account with real money, blow up a bunch of combines that you end up having to pay for with new money, or blow up an XFA that you worked really, really hard to get. Or you can say, you know what? I simply am not reading this properly. I am not going to trade anymore. But see, what we end up doing is we end up saying, no, man, I'm going to get it back. I'm going to get it back. And the head game, I have to tell you, that is the gambling man's ruin, right? The gambler's ruin is the ruin that says, I'm just going to get back. I'm just going to take one more trade and I'm going to get it back. Please don't do that. Can you have a look at gold? We're looking at gold right now. Looks great. I have a trailing stop up here because I would like to end up green. I did not like that it moved so far below. And we are moving into the ledge. So it'll stop me out with either 110 or it'll go up here to 42.34 and I will get, I'll move the stop up to give me about 170, or it breaks into the top of the wick from last week and I'm off to the races. Okay? So, oh, good for you, Boricus. Are you painting cabinets during the day? Painting cabinets at night? Okay, that's hat tip to you. I appreciate that. That's getting things done, no matter what. So yeah, now I made 2 trades tonight, right? I made one in the NQ, I made one in gold, made one in Bitcoin. I don't know where that one's going. Let's have a peek. All right, so it's a little bit green, right? It's doing its thing, a little bit green. So whatever. Maybe it goes to the call wall. I'll move it up. This chart looks absolutely crummy. But how did I know where to take the trade? Listen, what I want to do is make it simple because I want you to realize, so I took about 140 out. So because I want you to realize that the game is simple, but you need to manage risk. And if you're looking at building up the size of your account, you take the little jabs, just like MP and the TopstepTV crew talk about. Jab, little bit at a time, and then work yourself through these boxes. Listen, you can work through, I don't know that working through a 1 minute box is the smartest thing, but you can work through a 3 minute box. You know, Jay uses 3 minutes. I think 3 minutes is really a beautiful box to look at because you get to see a range of where the buyers are, where the sellers are, if they're continually doing the same thing. Because we'll look at they accumulate and they distribute, and then they accumulate and they distribute, or they accumulate and they liquidate. That's all that's happening. So if all you do is go, all right, well, I'm going to take a long there because of X. As long as you manage your risk, it's okay to go, hey, Anne-Marie took this long, I'm going to go short. Listen, if you stay in for a different period of time than me, you could win and make money on your trade now. If I held on longer, I might make money later. We might both make money and be in opposite sides. It's all about the timing and which part of this box you're working on. So my takeaway for you this week is, 1, you are going to see some monster candles. Make no doubt about it. This is going to be another very volatile week. I believe it's going to be another volatile week. We're going to potentially, we could see some upside that continues, but it's going to be grinding upside because we've got a lot of market rotation. There are a lot of people underneath that are running gigantic pools of money that essentially have stopped trading for the year. And so the next thing they're looking at is, how does my first quarter look? How do I set up for the end of the fourth quarter? And then coming in, what does my window dressing look like at the end of the month? So here's an interesting statistic. Less than half of all the portfolio managers tracked in the nation have beat the S&P benchmark. Why? Because they were not heavily slanted into the Mag 7, and they have to be like that because they have to manage risk. If you've got something that's just screaming to the upside and all of a sudden a piece of news comes out and it falls off a cliff, you can't call somebody that you've got a $10 million portfolio with and go, hey, listen, 20% of your position is gone. You can't do that. I mean, we do that sometimes. If you've got a $5,000 account, we bleed 1,000 of it out in a day. You can't do that if you're a portfolio manager. So they've been underperforming. So what is likely to happen to take us into the end of December is more window dressing that will lift the market into the end of the year. Santa Claus rally normally happens after Santa is supposed to come. So that's what I see, but to be sure, we've got all kinds of things going on. I am so glad I covered that gold. So glad I covered that gold. I just saw it just behaving very badly. I did not want to keep it. I'm very happy about that. All right. So, any last questions? Let's see. No, he's around. He's around. Why Santa? Is he not real? Oh, Santa's real. He's just not who you think he is. Why are you trying to trade at the open on a Sunday? Because I want to show people that you can trade in just about any place that you can find a pattern, which we did. And it's okay to try to trade when things are quiet. right? Nothing's wrong with trying to trade when things are quiet. Things are quiet when it's just barely opened. How would I recover from negative 100 on XFA? You know what? This is a great question. And this is a question that is a common question. We rush in, the market gets a little bit crazy, we jump in with extra risk, and then all of a sudden we're down in our XFA. So here's how you do it. First things first, you step back completely and you go, how did I lose that 1900? Okay? Now, that's going to be hard. You have to do some homework, look at yourself in the mirror, say, holy cow, I shouldn't have done that. But first, a review of the mistake. Second, go to micros and trade small, jab, jab, jab. Couple of micros at a time, $50, $50, $75. You look at your stuff, all of a sudden, you're up $250 on the day. You might be going, holy cow, that sounds laboriously horrible. Well, guess what? The only way to get yourself back into a range where you aren't under the gun is by going slow and small so that you can build the cushion and then you can go big. So here's the great thing. If you go small, let's say you go weak, $250, $250, $250, you're just trading your cycles. What you're doing is developing a rhythm, developing consistency with a strategy that holds, understanding your mindset about how to manage your risk, and preparing for more upside. Because here's the thing. If you can't trade a little bit consistently upward, you will not be able to trade a big bit consistently upward. I'm telling you, it's just like people who've never managed money or never had money, and all of a sudden they have a gigantic windfall. Some uncle or grandmother leaves them $1 million, and 3 months later it's all gone. Why? Because they don't know how to manage risk and they don't know how to manage money. So say to yourself, I know this is my Pollyanna thing, but say to yourself, you know what? I am grateful that I am sitting in this upside down position, because what it's going to teach me is threefold. It's going to teach me patience, it's going to teach me attention, and it's going to teach me the power of consistency. I promise you, once you get yourself to that space, then you size up. But here's what normally happens. You do it for 3 days, and then you go, I can't stand it. I'm moving too slow. And you size up, and you go right back down again. And then you get frustrated, and then you're clicking buttons, and you're like, I don't give a crap what happens. And you blow the account out of pure frustration. You've got to manage your mental landscape. You must manage your mental landscape. If you do that, you're going to win the game. But winning the mental aspect of this game is going to be worth everything to you in the long run. It's so true. It's so absolutely true. Okay, so Craig, I think you need a hug, buddy. And that's not what I was saying at all. Craig says, sounds like a great way to blow up your account. Yeah, go small until you have a cushion and then just go all in. Craig has a listening problem. Plus, Craig needs a hug, folks. Can you check silver? Anne-Marie, I'm not sure if you saw my first question. Did I look at bull? I don't know what bull is. Can I check silver? And what are your thoughts on staying at a small size but struggling to hit the 200 mark for a qualifying day? Okay, that's a fear problem. Someone says, what are your thoughts on staying small but struggle to hit that $200? Well, now it's $150. It's not $200 anymore. It's $150. And you're struggling with fear. That's really what it is. If you are, you have two things going for or against you. You're either struggling with fear or you're looking at the market with a mindset of, well, I think that's fear-based also, right? You have to see if your strategy is giving you a good risk to reward event. If your risk is outsized for what you're carrying through as a reward, you're never able to size up. But if your risk is properly managed, you'll be able to do okay, but you just have to get over the fear event. And the way you can get over a fear event, go to your practice account and work that way until you get to the space where you go, you know what? I just simply have got to stop being scared, or I'm not going to do it. It's like, if you play hockey or football or some kind of vicious sport like that, you're going to sit in a spot where if you're afraid of getting punched in the mouth, or plastered into something very hard on the ground, you're going to be ineffective. So that's what I would say. Yes, that's my favorite thing to tell people, because really it's true. If people are just being nasty, they just need a hug. They need to feel good. If you feel good, you're not going to be nasty. You can't do it. You can't do it. Okay. All right, everybody. That's it for me. It looks like my Bitcoin might be upside down, but as we know, we've only got a little bit there. Silver looks a little sideways. I don't see anything there. Silver makes me nervous right now. I'm about to get stopped out. Look at that. Person who went long is going to win here in this space, or it's going to look good for them. All right, so thank you everybody for joining me. I love to talk about the things that matter in trading. Things that matter really is what's going on in your chest and at the solar plexus event, right? What's our headspace sitting like? Where are we? We know mechanically often what we need to do, but many times we're unable to manage that properly. So just be good to yourself. Don't beat yourself up. This is a game that you'll be studying your whole life, right? I mean, why did Charlie Munger say that his family thought that he was a book with legs? Because he studied every afternoon of his life, right? His head was always in a book. And we're always in a space of learning, and that means actively moving into what things are saying in the market. But I promise you, if your job becomes first. Let me understand what people are trying to do with price. Because remember, if you've got big money, you're going to try to shove price around. And so the more money you have, the more you'll be able to shove price around. And if you can't shove price around, it sits in the box until somebody comes around and shoves price around. And so just remember that and watch for those breaks. Keep your stop tight. Just pay attention and you'll get really, really good. Really good. All right. Okay, last thing. Somebody says, hey, look at nat gas. Whoa. Okay, so this is so volatile. I think a lot of this has to do with what's going on in the energy complex. There was a very interesting meeting this weekend, and there is a force that is not happy about nat gas moving the way that it is. But here's the thing. Do you see this box down here? That's going to be the region that tells us if nat gas is going to hold a floor. Look at what happened. This is Friday's motion, pre-market. It stayed in the box, high, low. Look at where it opened, at the top of the box. At the close of Friday opening candle, that would have been Thursday night at 6 p.m. The close of that candle was the open of this one. And so my suspicion is that if they retest that edge and hold it, they're going to try and fill the gap. Otherwise, they're going to come right down here and sit in the pocket. Right? Notice the low wick for this candlestick is also the support edge from the halfway mark of the box. Can't make this stuff up, folks. It is absolutely so important. You just stare down the box of inventory. Give it some time. Look to the left. Old resistance, new support. Old resistance, new support. Over and over and over and over again. It's the same song. You just have to figure out where they're positioning the notes. All right? Take care, everybody.